Hey, it's George from Triangulated back with another listen to the markets. This week I'm going to start off by letting you know that, in case you didn't already know, I am the same George Coyle that's the co-author of the Market Wizards, latest Market Wizards book with Jack Schwager. And as you can see on the screen here, the book is out. So I'm going to provide a link to it below, but please pick up a copy. Yeah, I think it's a great book. Put a lot of heart and soul into it, and I think it'll teach you a lot of stuff about trading. Again, link will be below, so hopefully you get a copy and you like it and leave a review. Okay, with that, let's get into the markets this week. So, the markets continue to be pretty erratic of late. And really, the stock indexes in the last few days have started to roll over and sell off pretty aggressively. So here's the S&P 500. It went from 760-ish per the SPY down to about 722 yesterday. Here is the Nasdaq 100 ETF, and it went from about 750-ish down to 687. And as you can see by the red candles, these were some unpleasant days, some of the worst days in many months. And it's not a huge surprise. The old saying is that the markets are an escalator up and an elevator down, and the Nasdaq in particular was up, I think, over 30% from the low in March to the high. So to see something go up that far, that fast, it's just not surprising to see it sell off. I mean, it could still crash another to 15-20%. We'd just be back to where we were 2 months ago. Let's hope that doesn't happen. But not a huge surprise, but still, when you get these kinds of days, they're a little destabilizing because I don't think we've had a day like that since, I guess, about last November. And really, there hasn't been a terrible window with this many kind of down big days in a while. So that said, another thing I'm noticing is gold, which had a huge run up in kind of the mid 2025 through the beginning of this year. It continues to sell off, and so does silver. So I'm not entirely sure what to make of that, other than I notice it's happening, and clearly at the moment, gold and silver are not havens. I know that silver also has been something that is supposedly going to benefit a lot from the growth in the solar energy trend, but as evidenced by the price, not at the moment. And at the same time, Bitcoin's going down. With that one, you got to wonder, is that somehow related to Michael Saylor and his being, I think recently, not sure if it's true as of today, but underwater on the entire Bitcoin position that he has. He did sell a little bit of Bitcoin. I think he bought more after the fact, but that got people pretty fired up. So he's obviously the biggest Bitcoin bull out there, or one of them. And so when he sold a little bit, it just got things going. But regardless, these three assets, gold, silver, and Bitcoin, are not really proving to be havens. What is interesting is that when things got ugly, money really went into two stock sectors. One is consumer staples, XLP, and it's jumped up a bit. And the other is healthcare, which just continues to make new highs. So the traditional wisdom is that, consumer staples and healthcare stocks tend to do well when times are tough, and they are really becoming the haven. And one thing I didn't add here, I'll add it really quickly, is the bond market. I'll use two different ETFs, the TLT and AGG. But if you look at AGG to start, it really isn't coming up despite the recent pullback in stocks. And if you look at TLT, it is still in a gigantic multi-year downtrend. So typically bonds are somewhere, US bonds are somewhere that people like to put money when things start to get a little dicey and scary. But that's not the case right now. And I wonder if that relates to potentially, the level of debt in the United States. Maybe it has something to do with Kevin Warsh, the new Fed chairman. Maybe he's going to raise interest rates. I also wonder if it has something to do with Trump and his approval rating, but I'll get to that in a second. But I guess the bottom line is, when you look at the prices, clearly the bond market has not been a good place to be for the past several years. And that's true in AGG as well. So the longer duration bonds have done worse. The shorter duration less time to maturity is duration, but well, time to maturity is duration, less time is the shorter duration. And essentially, they haven't gotten hit as hard, but still not a good place to have put money for the past few years. So bonds are not a haven at the moment. Um, all that said, as far as fundamental motivations for what's happening, I've been doing this for a while, and Trump comes up every week, and I can't think of any prior instance in the last 20 or so years where I've talked about a president and what the U.S. president is doing as it relates to markets almost every single week. So a couple things have happened recently, and one of which was Trump was doing an interview with NBC's Kristen Welker, and she basically asked him for evidence to support his claim that the California elections are rigged, and he said all you have to do is look, which certainly the stuff I'm reading about the elections out there raise an eyebrow and make you wonder. But the fact that Trump didn't support his claim with any evidence was not a fan favorite response, per what I'm reading on X, Twitter. Also, I think it was yesterday, the Iranians shot down a U.S. helicopter, so Trump started attacking the Iranians again, and that is not. I think that could be leading partially to what's going on in the stock market. But in aggregate, since Trump has been such a force in the stock market in the past 6 to 12 months, I really started to wonder, well, maybe given the things that are happening, the interview and the thing that Iran continues to go on, if maybe sentiment on him is shifting a bit, and that's leading to a pullback in the markets. And I looked up aggregate, basically poll from, it was the New York Times, but it aggregated polls on sentiment on Trump for the past, across, I guess, 20 of them, essentially. And ultimately, what it showed is that the approval rating on Trump is really low. It's somewhere around 40%. So I have to wonder, given how much he's involved in the markets, and especially the stock market, if his declining approval rating and his recent actions are causing stocks to get a little dicey too. Maybe people wonder if he's going to be able to support the market like he's seemingly been doing for a while. He certainly talks a lot about the stock market and uses it as, I think, a political device more than anyone else has before. So anyway, we'll see. Obviously, looking at this chart of stocks right now, it doesn't look great at the moment, but if you zoom out, the long-term trend is still very much up. And these pullbacks typically are short-lived and result in very quick spikes in the last few years. One of these days that won't happen. Who knows which time will be the one where it continues to sell off. But yeah, that's basically it for the week. So thank you for listening, and I'll be back next week.